All right, welcome to the multi-dimensional trading video series. This is video number 4 of our 10-part series. Today we are going to go over how to find liquidity using a very simple theory. This is a theory that in the multi-dimensional trading Discord we had come up with and to show how to find liquidity. Where is liquidity? There's plenty of methods out there that you can go on the internet and look for and see liquidity below some lows. We like to find liquidity by actually visualizing it on the chart as a bubble because that's where liquidity is. So in this lesson, we are going to go over what is called the bubble theory. The bubble theory is what we use to find where liquidity is at, where the price would run down into, stop, and reverse. That is what we're looking for. The bubble theory is very easy to understand because all markets are normally propped up on one big fat bubble. And at some point, that bubble is going to have to pop. And that's what it does. It always pops. Even if a price was suppressed to the downside, there would be a good bubble on top of it, right? And price would run up into that bubble. But in this video, we're going to show how to find liquidity to take the long position rather than the short position. We'll get to that in maybe a future video. But the concept works literally the same. As you can see, there's a long trend line from this low to this low. And then all we're doing is taking our brush and drawing a bubble along this line because the bubble will not be any bigger than the trend line is from this low to this low. The length of the bubble will not be any bigger than the trend line is. And that's how we accurately measure where liquidity will fall to, where price will run to, how deep the bubble will be, how large is the bubble. We'll know by taking this one trend line and drawing it across to the next low and then drawing a big old bubble under it. It's really simple because when you grab your brush and draw this bubble and try to make a circular angle or area right after coming off this line, you can't draw it any larger than it allows you to draw it. That's how accurate using this theory is. The bubble theory shows us literally where liquidity will be. And at the bottom of the bubble is usually where liquidity is. That is where it stops. As you can see, it gets close to the bubble, hits that liquidity area, that liquid area. It bounces. It has all this bubble propping up the market, and it runs right down into it. And what gives us a second confluence, so we know we have a high probability trade to take along, is that it ran down to the bottom of the bubble, and it also lands at equal lows on this horizontal line. We have the bottom of the bubble and equal lows on the horizontal line. We know we have a high probability to take a long position and catch the bounce. Or if we were short for some reason up here and we found the way to go short, we would know where our take profit would most likely be. It would be right into liquidity. This is where all the orders, buyers, sellers, people changing hands at this price, volume is here. In, out, all in this area. See how volatile it got into this bubble? Smash down into the bubble, liquidity taken out. Smash up. all inside of this bubble. We literally found the hot spot. Where's liquidity? It is in the bubble that is propping up this market. As you can see, the market it looked like it's being propped up literally. Where is all of the liquidity at? It's under it. We use the bubble to find out how deep is liquidity. How deep is that pool of liquidity? It's this big, and the reason how we're able to measure it is taking our brush, drawing it across the line. You cannot draw it any bigger than the trend line is. You just follow the line, circle as ugly as you possibly can, and make a bubble. Look at this fat bubble. It doesn't have to be perfect, propping up the market. And then where you take that trade is normally at the bottom of the bubble. Even if you didn't have this equal low confluence and you couldn't see it for some reason, your chart was turned sideways and you were just trying to make a quick analysis on where liquidity is at when you've seen price. Draw the trend line, draw the bubble, and you can figure out exactly where you are in the process. See, I wouldn't have taken the long here because I can clearly see I'm in the beginning of this bubble. I want to take my long at close to the bottom of the bubble. That is how the bubble theory works. We just want to get into the bottom of liquidity so we know we have the best possibility to take our trades to the upside. Or if this was a short position, we want to get into the top of the bubble so we know we have the best possibility to take our trades on the short side. It is as simple as that. It looks like third grade drawings, second grade, third grade drawings on the chart. And it works because it is really that easy to find liquidity. Because that's all we're doing is looking to see where is liquidity, where is the chart going to get volatile, and how can we be on the right side of that when it does. We take our trend line, we draw it from this low to this low. Draw a big old bubble under it. Where that bubble lands at the bottom, it's as big as you can draw it. If you try to draw it with your mouse, this is where it's going to land. You can't draw it. It won't allow you to draw it all the way out because if you do that, you're drawing it wrong, right? If you take your mouse and go all the way over here somewhere, but if you draw it across the trend line, you taper it off where the trend line stops. Draw it, draw it, draw it. You're gonna find the bottom of the bubble, and then when you have the confluence of the equal lows at the same time, this is giving you that multi-dimensional trading concepts, right? Where you're looking at multiple dimensions, space, time, right? And price. The bottom of the bubble has us down here. The equal lows also puts us down here. We know we took out liquidity, so we know these equal lows are strong. We went right into liquidity. We popped the bubble. And that is how the bubble theory works. And like everything that we go over on the multi-dimensional trading video series, this works on every time frame. Multiple dimensions, and what a dimension ultimately is a measurement of something. And this trend line and this bubble allows us to measure where liquidity will most likely stop, where the bottom of liquidity is, how much orders are propping up the market, how many stop losses are propping up the market. It runs right into them. It eats that bubble up, and that bubble pops. And that's where we go long at the bottom of the bubble. I know some trainers try to say we're trading with the banks. Honestly, if you really want to trade with the banks and large family institutions, you would have to trade the higher time frames. monthlies, weeklies, 3 months, 6 months, 12-month candles, then you would really be running with the institutions. If you want to trade like a day trader and make your money day by day, this is how it goes. Remember, this is not financial advice. What we are doing is just showing you how it goes, where liquidity is at, how to find it with these very simple and easy methods. Back test this. Get a demo account. Use paper money. Do not just go out and start trying to trade with real money because you see a video that shows you where liquidity is. This works on every chart. This works on every time frame. You will notice it the more you practice. When you see these markets being propped up, you will understand that it's being propped up by liquidity, by money, by traders, by people. Their orders are below the lows. We are just measuring how deep does that liquidity go. And by using the bubble theory, we can figure out how big and how deep that liquidity goes down. And then when we get that confluence of equal lows at the bottom of the bubble, that's when we know we have a high probability trade to take a long position. That's easy money. That is an easy concept. Very simple concept. That is as easy as it gets. Trend line, draw a bubble, find liquidity. Trend line, draw a bubble, find liquidity. Find the bottom of the market as it is, of the structure as it is, right then and there. Now, once again, this works on multiple time frames. So we're on the 3 minute here, right? If we were on the 1 minute, it'd be relatively the same thing. Okay? We're on the 5 minute or the 2 minute, same thing, right? We're on the 4 minute, same thing. 15 minute, same thing. We found the bubble of liquidity on 15-minute time frame. We're on the 1 hour, same thing. We found the bubble. Where would it stop? As big as this bubble can get, the bubble can only get as big as the trend line allows it to get. Okay, so if you draw that trend line from here to there and then draw your bubble, you can't draw the bubble all the way over here. It wouldn't even match up or make any sense. You just draw the bubble the same length of the trend line and try to make the circle. You do that hand motion, that drawing, you can't mess up because you only can draw it as large as the trend line allows you to draw it. And as you can see, we can go from the 1 hour all the way down to the 1 minute and find where liquidity is at across multiple time frames. Here at multi-dimensional trading, we are trading multiple dimensions. We are taking measurements of multiple dimensions. It is as simple as that, and that's why we find the best trades, the best setups, because it does not get any better than the bottom or the top for any trader. Whether you're an institution, a retail trader, a swing trader, a day trader, a scalper, it does not get any better than the bottoms or the tops. It is that simple. This is the 1 hour chart. We found liquidity at the bottom and we ran up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 hours. The price going north. Now it's on its 14th hour. Price headed to the north side by finding where liquidity is at. It is worth the wait to take the trades that make the most sense and have the highest probability. This has been lesson number 4, the bubble theory. Try it, back test it, use paper money, demo accounts, check different charts, You're going to find out this works across multiple assets. Like, subscribe. We will see you guys in lesson number 5, which will be coming soon. We'll see y'all later. Peace.